Welcome to Petro's Family Tax. Today we're going to talk about an emergency tax strategy called the erase and replace strategy that is meant to eliminate the interest payments that you should have paid on your taxes. So this is a case where we typically see for maybe new business owners that were unfamiliar with how our tax system works between estimated payments and withholdings. And if you're unfamiliar with that, we have another video over here that you can watch. Or investors that had some very large unanticipated gains. Maybe they had an amazing run on some of their individual stocks or large gains in their crypto that they're finally taking some or realizing some gains or rebalancing. Those are typically the situations we see this where we're massively underpaying taxes and we're here towards year end and we need to find a way to eliminate that underpayment penalty or interest. So there's two rules that we're using in this erase and replace strategy. The first is the difference between withholding taxes and estimated taxes. And the second is a 60-day rollover rule. So the first strategy with the withholding, if let's say, for example, we owe or we anticipate owing $100,000 next April, and we're sitting here at year end, the withholding rule means that if we withhold from our paycheck or from an IRA or from an annuity or pension, when we withhold, the IRS counts that as if it was evenly distributed throughout the year or evenly withheld throughout the year, even if it's in the last couple months of the year. The second rule we're using is what's called a 60-day rollover rule, which allows us to take money from a IRA, either Roth or traditional, and as long as we replace or contribute back the amount of distributions that we took within 60 days, it doesn't cause any additional taxes. So here's how it plays out. Let's say, for example, a client is anticipating to pay $100,000 next April, and we're sitting here at year end, and they might owe an additional $4,000 or $5,000 of interest. And so it's probably worth it to the client to figure out a way to eliminate that underpayment interest payment. And so what you need to have $100,000 either in a brokerage account, savings account, checking account. You also need $100,000 in that IRA. Normally, somebody might pay $100,000 from that checking account over to the IRS towards year end. And if they do that, they are saving themselves interest on that last fourth quarter payment, but they are not eliminating the first, second, and third quarter interest payments that they would owe if they paid next April. So what we do is, instead of writing that check to the IRS from your checking account, what we do is we distribute from your IRA $100,000 and do 100% tax withholding. So again, using that withholding rule where we are withholding, let's say in December, $100,000, that counts from the IRS perspective as if you withheld that evenly throughout the year, eliminating the interest payment penalty. But if we distributed that $100,000 from a traditional IRA, the problem with that is that we are essentially causing more taxes, a higher taxable event. And so we replace that $100,000 that we distributed from the IRA with the $100,000 that you had in that checking and savings and replenish that IRA. That's why it's called an erase and replace strategy. We're erasing the interest penalty from underpaying taxes and by distributing and withholding from the IRA, and then we're replacing those funds back in the IRA with a 60-day rollover rule in order to eliminate the taxable distribution. Now, the reason why this is purely an emergency strategy and not a good long-term strategy to do each year is that the 60-day rollover rule, you can only do that every 365 days. So if you implemented this December 1st, where you withheld from your IRA that $100,000, and then December 2nd, you replaced it, you rolled over from the checking account and replenished that IRA. The next time you can do that technically is December 3rd of the following year. So if you try to keep doing this as a long-term strategy, you'll eventually run out of room in that 365-day window. And so this is purely an emergency. And if you have any questions or comments or need some help, feel free to reach out to us. Happy to share some ideas and see where we can help. And if you did enjoy it, please like, subscribe, and hit that notification button. Thank you so much.